Welcome back to Explain the Charts, where we demystify the market's movements. Today, August 6, 2025, we're putting Intel Corporation, ticker Intel, under the microscope, combining recent news events with a rigorous chart analysis to give you a complete picture. Intel has been navigating a very challenging period, marked by significant company-specific news and broader industry shifts. Let's start by looking at the daily chart to get a broad overview of INTC's performance over the past year. First, let's address the headlines shaping Intel's sentiment, which are critical for understanding recent price movements. Just yesterday, on August 5, 2025, Intel stock was reported to be down slightly in after-hours trading, reflecting some continued pressure after market close. A major development from August 4th was Fitch's downgrade of Intel's long-term credit rating to BBB, with a negative outlook, citing a challenging demand environment and weak credit metrics. However, interestingly, the news also mentioned that despite this downgrade, Intel's stock saw a rally on recovery hopes during the trading day on August 5th. This rally, which appears to be the positive close on our August 5th daily candle, suggests investors might be looking past the credit downgrade, potentially focusing on the company's strategic shifts or a technical rebound from recent lows. Manufacturing concerns also loom large, with reports of significant issues in Intel's crucial 18A manufacturing process, impacting its ability to produce next-gen PC chips vital for future growth. This directly affects their foundry business, which posted a substantial loss in Q2 2025, raising questions about its viability. The company has also scaled back chip factory investments, including halting projects in Germany and Poland and slowing construction in Ohio, underscoring both financial pressures and a strategic reprioritization to conserve capital. Adding to the scrutiny, Intel's CEO is facing questions from a U.S. lawmaker regarding ties to Chinese firms, introducing a layer of geopolitical and regulatory risk that could weigh on investor confidence. Finally, Q2 2025 earnings, reported on July 24th, were mixed. Revenue managed to beat expectations, but EPS significantly missed forecasts, a discrepancy attributed to non-cash impairment and one-time costs. This earnings miss, despite the revenue beat, had a profound and immediate impact on the stock, as we'll immediately see on the chart. Now let's correlate these critical news events with the raw price action on the daily chart. Observe the severe downtrend that has gripped Intel since its highs near $44 in March 2024, representing a substantial erosion of shareholder value over several months. We can clearly identify a critical support level around the $30 mark, a psychological and technical barrier that was tested multiple times, but eventually broke down under persistent selling pressure, confirming a strong underlying bearish momentum. The precipitous drop in late July 2025 is unmistakable and directly correlates with the mixed Q2 2025 earnings report and the news regarding factory scaling back. Specifically, the stock plummeted from the mid-$23 range on July 24th to the low 20s by July 25th, marked by very large red candles on extraordinarily high volume, which signifies widespread capitulation and intense selling pressure in response to the disappointing EPS and manufacturing updates. This period of intense selling pushed the price to multi-year lows, breaching several historical support zones. However, following these dramatic drops, especially on August 1st and August 2nd, we've seen some signs of consolidation and what the news refers to as a rally on August 5th. This recent uptick, while a modest bounce in the context of the larger decline, reflects that recovery hopes might be drawing some opportunistic buyers back in at these depressed price levels, forming a potential short-term bottoming attempt. Let's zoom into the 1-hour chart, specifically focusing on the period around the Q2 earnings release from July 23rd to July 24th, to truly grasp the immediate aftermath in finer detail. Here, you can clearly witness the dramatic waterfall sell-off that initiated on July 24th after the earnings announcement, characterized by a series of large, red bearish candles, each closing significantly lower than the previous one. The massive increase in volume during these hours confirms that a large number of participants were exiting their positions rapidly, pushing the price down aggressively. The previous immediate support level at approximately $22.50, which had previously held briefly, was breached with convincing force, effectively converting it into a new, formidable resistance level for any potential rebound. The subsequent hours on July 25th show the market attempting to find a new equilibrium around the $20 to $21 range, with some buying interest emerging, but still overshadowed by the lingering bearish sentiment. The sustained elevated volume during this stabilization phase suggests active price discovery, as both sellers continue to offload and opportunistic buyers begin to accumulate at what they perceive as attractive lows. Now, switching to the 15-minute chart, we can gain an even more granular perspective on the immediate price action, particularly surrounding the reported August 5th rally and the close of our current dataset on August 6, 2025. On August 5th, despite the negative Fitch downgrade news, the daily chart showed a notable green candle, hinting at underlying strength. This intraday strength is clearly detailed here. Looking at the 15-minute data for that day, we observe the stock opening around $19.70 and then showing a fairly consistent upward trend throughout the trading day, with higher lows and higher highs, culminating in the daily close of $20.19. This short-term strength, as implied by the news, likely stemmed from recovery hopes triggering buying and possibly a significant amount of short covering as bears took profits or were forced out of their positions. However, as noted by news sources, the stock was already indicating a slight decline in after-hours trading on August 5th, which could foreshadow a softer open for the next day, August 6th, confirming that this short-term bounce might already be facing renewed pressure. The 15-minute chart, with its granular detail, vividly confirms this immediate volatility and extreme sensitivity to breaking news, highlighting how quickly sentiment can pivot and how critical short-term levels become for active traders. From a bullish perspective, Intel's newly emphasized strategic shift towards aggressive cost-cutting and a more disciplined approach to capital expenditure, directly linking it to committed customer demand, could significantly streamline operations and improve future profitability metrics. The recent sharp price decline, particularly the one following Q2 earnings, might be an overreaction by the market, potentially presenting a compelling value opportunity for long-term investors if the company's turnaround strategy ultimately proves successful and well executed. Furthermore, the fact that Intel's Q2 revenue actually managed to beat analysts' expectations, despite the EPS miss, suggests there is still underlying demand and a resilient core business, which is a positive sign amidst the challenges. On the flip side, the bearish arguments are quite compelling. The unresolved manufacturing issues with the crucial 18A process remain a significant overhang, directly jeopardizing Intel's ability to remain competitive and deliver next-generation chips on schedule in a highly competitive market. The consistent and substantial losses reported by the foundry business, coupled with the scaled-back investments in new factories, clearly indicate fundamental operational challenges that are unlikely to be resolved swiftly or easily. The ongoing scrutiny surrounding Intel CEO's alleged ties to Chinese firms introduces a murky layer of regulatory, legal, and reputational risk, which can severely impact investor confidence and future operational flexibility. Moreover, Intel faces relentless and aggressive competition from agile rivals like AMD and NVIDIA, who continue to innovate rapidly in key growth areas like AI and data centers, constantly threatening Intel's market share and profitability. For active traders, identifying and reacting to key price levels is absolutely paramount in a volatile stock like Intel. The immediate and crucial support zone to watch is firmly established around the $19.00 to $19.30 range, a level that has been tested and demonstrated resilience multiple times recently. A sustained break below this critical support level, especially if accompanied by abnormally high selling volume, would be a very strong bearish signal, potentially opening the door for a further downside move towards the $18 mark or even lower. Conversely, on the upside, the immediate resistance for Intel stands prominently around the $20.50 to $20.70 zone, a price range where previous attempts to rally have stalled. A decisive breakthrough above this resistance, particularly if accompanied by increasing buying volume and positive news catalysts, could signal a short-term bullish reversal, targeting the next resistance levels in the $22 to $23 range. Beyond these immediate levels, stronger overhead resistance zones are identified at $25 and then $27, which correspond to previous significant consolidation and distribution areas on the daily chart, requiring substantial momentum to overcome. When deciding when and what price to initiate a trade, always integrate the fundamental news context with your technical analysis. Positive updates on the 18A process, clear progress on the strategic shift, or a favorable resolution to the CEO's China ties could provide strong catalysts for a sustained bullish move, signaling a shift in investor sentiment. Conversely, any further negative news regarding manufacturing delays, weakening chip demand globally, or escalating regulatory issues could quickly trigger another significant sell-off, overriding any technical bounce. Always look for confirming candlestick patterns at these key levels, such as robust bullish engulfing patterns or hammer candles appearing at support, indicating buyer strength. Conversely, watch for bearish patterns like evening stars or shooting stars forming at resistance, signaling seller dominance. Finally, consistently pay close attention to trading volume. A high-volume break of a significant key level is far more reliable and indicative of true market conviction than a low-volume move, which can often be a head fake. To recap our comprehensive analysis, the critical price levels to closely monitor for Intel are the immediate support at $19.00 to $19.30 and the immediate resistance at $20.50 to $20.70. A sustained upward movement above $20.70, particularly if it's strongly supported by positive company news regarding manufacturing improvements or successful strategic execution, makes a push towards $22 or even $23 moderately likely, with about a 60% probability. The conditions that would greatly reinforce this likelihood include a strong Q3 2025 earnings guidance and a noticeable improvement in overall investor confidence towards Intel's ambitious turnaround strategy. Conversely, a decisive break below $19, especially if further exacerbated by continued negative headlines or a material weakening of global chip demand, could see Intel testing lower supports around the $18 mark, a scenario we would also consider moderately likely, with a 55% probability, under sustained bearish pressure and lack of positive catalysts. Crucial things to look for in the coming weeks and months include Intel's upcoming announcements regarding their 18A process progress, any resolutions or developments concerning the CEO's scrutiny on China ties, and, fundamentally, the overall trajectory of the global semiconductor market demand and pricing. These pivotal factors will ultimately determine whether Intel can genuinely climb out of its current prolonged slump or if further downside price discovery is unfortunately still on the horizon. Thank you for tuning in to explain the charts for this in-depth look at Intel.